We have Yogesh Patil of Govt Capital with us to talk to us about ONGC. Now, Yogesh, let me just quickly come to the point. Couple of developments with regard to ONGC, positive ones, of course. 20% premium price for domestic gas for new wells. How constructively do you look at this, and when does the impact start to feel, at least where the numbers are concerned?
Okay, thanks. So, lot of series of positive news flows for the ONGC in last couple of days. First one was a 20% higher gas prices compared to the APM gas prices. So now looking into the ONGC, ONGC will produce close to 21 BCM kind of a gas in FY25, and additionally 20% incremental gas will come from the newer field like the KGD6 Western Offshore fields. These additional incremental gas will be eligible for the 20% higher gas prices compared to the APM. That's the positive. If we look down into the EBITDA side and the EPS side impact, these 20% higher gas production will lead to close to 7 to 8% EPS upside. On the top of that, again, a 20% premium gas prices will again lead it to the closer to 7 to 8% EPS upside. So in total, 15% EPS upside would be there. That is the one thing. But in last few years, what we have observed, ONGC's gas production is on a decline, mainly because of a natural decline. The fields are old. So it will take a time to ramp up the gas production from the newer field also. So not exactly into the FY26, but in FY27-28, we can see a 25 BCM kind of a gas will come from the ONGC fields. Approximately 20 to 25% of these total 25 BCM gas will be eligible for the 20% higher gas prices. So I think so. This is one thing. And recently, if you notice down in the Friday evening, ONGC come out with the one press release that the government has approved sanctions for approved the amount closer to 18,000 crore. So this is approval from the side of a government to the ONGC. ONGC can invest the same amount into the one of their subsidiary, that is the ONGC Petro Additions Limited. That subsidiary was suffering from 2 to 3 issues. Like one issue was their higher debt. So the debt was quite closer to 32,000 crore. And because of these fund infusion from the side of ONGC to the OPAL, will bring down 32,000 crore debt to the closer to 18-19,000 crore. That's the 11 to 12,000 crore. That's the one thing. Secondly, ONGC was also OPAL was also facing an issue of a shortage of gas from the domestic fields. So government has notified in that press release that ONGC's OPAL will start receiving closer to 3.5 MMSCMD kind of gas for the petrochemical unit, which is the OPAL. So all these two things are positive, and the stock has also reacted positive to this news flow and the developments.
Got it. Yogesh, one quick follow-up. There are two key triggers here, of course. The other key trigger is going to be the production ramp-up at KG Basin, likely from Q3 FY25. Do you believe that continues to stand? That's the first part of my question. Second is, when do the EPS upgrades, which you've just spoken about, start to kick in, at least where your numbers are concerned? FY27, FY28?
So coming back to your production upside question, yes, Q3, not Q3, but in a Q4 FY25, we will see an uptick in gas production from the KG basins, what the company has guided on the recent call. Secondly, increase in EPS we can see in FY26 majority, because not only from the gas production upside in KG basins, but closer to 45,000 barrels per day additional oil will also flow from the KG basin. So gas plus oil will drive up our FY26 numbers, and that will be really visible in FY26 side.
Well, the stock has had a great run, Yogesh. Just with regard to year-to-date return, 66%. And over the last 5 days also, we've had a very good run, almost 8% higher in the last 5 days alone. Valuations, do they continue to look attractive to you?
So what we believe that stock is not still factoring or discounting at $75 per barrel net realization on their oil side. Secondly, in last 2 to 3 years, what we have seen number of policy changes which are in favor of ONGC. Earlier the gas prices used to in the range of $3 to $4 per MMBTU. Now they are realizing closer to 6.5. In FY26, that gas price realization will again go up by $0.25 per MMBTU. So all these positive things are not completely factored in. We still believe there is a upside still remain in the stock, and we are positive with the accumulated rating on the stock.
Yogesh, is there a big differential in terms of financial performance between ONGC and Oil India, or do you expect Oil India to move in tandem?
So, in case of Oil India's gas production upside is also there. But the problem, not a problem, but the issues with the Oil India is that the gas which they can produce even right now, that is a strand. They need the northeast gas grid pipeline ready that should get connected to India gas grid pipeline. Then only Oil India can evacuate or can transmit the gas from the northern eastern side to the main part of the India. So we need to wait and watch till the time these gas pipelines get ready. Then only that gas pipeline can transmit the gas from the Oil India fields to the main region of India. That's the one thing. Secondly, Oil India is not at all facing any kind of oil production decline. So they are not facing a natural decline as of now, and they are consistently reporting the positive oil production growth in last 2 to 3 years. So that is a positive thing compared to the ONGC, at least in the current scenario for the Oil India.
Very quickly, 30 seconds. I don't know if you track some of the smaller ones, but some of the others which have started coming out with their gas blocks, HOEC and some others. Do you track any aside of ONGC and Oil India?
We only track ONGC and Oil India.
Yeah. Got it. Okay, great. Yogesh, thanks so much for joining in today. Really appreciate your time this morning.